Hey everybody, Jake here, TrendSpider, to go over the weekend video update into the second week of October. And kind of a crazy week out there, very dramatic week, up and down. You had some big moves to the upside, you have some big moves to the downside, especially on Friday, making it seem like it may have been a really rough week, but actually a lot of the candles still closed green, believe it or not. So starting with the SPY, you can see here that we've got this kind of descending support zone here that would be potentially an area to watch below if we continue to move down. But like a lot of these charts that I'll go over today, your line in the sand is still just your lows from the previous Friday. So really just seeing if we can hold these previous lows. If not, then this green support zone is definitely in play below. Now on the weekly chart, you can see here that we are starting to kind of dip into the 2020 high, the February 2020 highs, and then the August 2020 high zone here. So anywhere from around 340 up to around 360. So you can see here that we are starting to kind of get into this area, and quite a bit of margin of error around this area. So, if we hold this general area, this is a pretty classic horizontal support zone, but still some downside before we get to the bottom of this. So 340 is still quite a ways down if we did get all the way down to the bottom. But for now, on the daily candle, main thing to watch is this previous low from the 30th of September. If that breaks, then your diagonal support zone below would be the area to watch. And remember, that's a function of time. So as time goes by, this line gets lower and lower. So, your potential support zone on the 10th, let's say around 345, isn't going to be the same if it took a few more days. Let's say it took until the 14th, then all of a sudden your support zone is down in the upper 330s. So just keep that in mind. Anytime you're using diagonal support, resistance, whatever, it is a function of time. So that those levels do change as each time frame, as each time period moves on. The Qs, same thing here. Really a great example of the anchored VWAP handoff, something that was really created by Brian Shannon. So full credit to him for kind of teaching me this. But essentially what you have here is you have your swing high VWAP zone starting on the 16th of August. And you can see here that you've got this candle here that is your handoff. The handoff is essentially where you create another VWAP, and that's the last candle to touch the original swing high VWAP. So you can see here's your handoff candle on September 12th. And you can see here that we rejected perfectly at this area, which was also in line with this gap above. We filled the gap. We didn't get above this zone. And now we're almost right back down to where we ended last week. And once again, this is kind of your line in the sand as well. You could go and create a support zone here, give or take. Let's call it this area here. And so if we did continue to break down through this previous low, then that support zone is in play. And I'm pretty much starting from September 1st, connecting that to September 23rd, extending that, and that's how you get this support zone below. Same thing, it's a function of time, it's diagonal. So, if we move straight down on Monday all the way down to this area, that would be around 258. If it took longer than that, we could be talking the low 250s. So it really just depends on how quickly, we move down, or if we even break this previous low. That's your first thing that you have to worry about. This is conditional. If price doesn't break below this previous low and continues back up, then your gap above would potentially be your target above, which is just this huge gap here that would fill right around 279.50 or so. On the weekly chart, you're starting to get this descending triangle forming, which isn't the best look, especially considering we've seen some pretty big moves down through these descending triangles that have been forming on the weekly. AMD is the first one that rings a bell, and I'll go over that one here shortly. But all in all, we really need to hold this level. If not, we do have quite a bit of room to move down. Just using basic horizontal levels, I would just use these previous lows here. This next pivot pretty much from September 2020. We've already kind of touched this area here. Here's your pivot right now from October of 2020, and that's exactly where We bottomed out last week and then almost got to that level once again this week. But all in all, let's call it 265 to 267. If we break down through that, then 260 would definitely be the area to watch below. Going into IWM, this is a great case study on volume gaps. So volume gaps are essentially areas where you don't have a ton of liquidity. Price can move very quickly. We saw that both on the upside and the downside this week. So you can see here that we bounced off of this green zone. This is what I like to call break-even demand. And keep in mind, this volume by price will change, right? So this big node of volume here wasn't actually here when we were moving up. So, as price action evolves, these 3 days, there was volume there, and that's why you've got this volume node here now. But all in all, you can see there's still not a ton of volume through this orange area. That's what you call the volume gap. So we moved up very quickly through it, moved right back down to the break-even demand zone. That's an area where, previous market participants who bought, they were initially up earlier in the week. Now they're almost back down to break even. A lot of the time that can dry up your supply because now there's no more profits to take advantage of and sell. So supply dries up a little bit. On the weekly chart, pretty much at this point, just a classic SR flip. So we talked about this chart on the last video. We had this diagonal support zone break down 3 weeks ago. We broke down, retested this area. That's exactly what you generally will see on a breakdown. You retest where you broke down or out from. So in this case, you can see the wick of this weekly candle retested this previous area almost perfectly. And then we pulled back on Friday with a pretty brutal day here across the board, really, but especially for IWM and the Qs. Now, Bitcoin has been one that has really been quite resilient here. And I don't know how many weeks at this point this descending triangle has been in play, but it's been a hot minute. You can see here that we're finally getting very close to the apex of this triangle. Once again, earlier this week, we retested this resistance zone, rejected here, and now we're kind of right back to where we started the week, maybe a little higher. So all in all, you still have this descending triangle. Statistically speaking, descending triangles do have more of a bear bias. At first, it was looking like we may get a move to the upside, but just a perfect rejection here at this resistance zone, and we'll see how we play out into the weekend. A lot of the time, if the market has a really bad week, sometimes that spills over into in Bitcoin, in crypto overall into the weekend. So you could also argue that we do have this bear flag here as well. So you can see here, pretty classic, just kind of bear flag forming, kind of a long bear flag considering, the move down is about as long as the bear flag, maybe less. So it's hard to call that a bear flag, but all in all, the descending triangle is definitely making the market at this point. And then on the weekly chart, you'll see that, we did break down through this area. We retested this area a couple weeks ago, and now we're just kind of sitting below it. So all in all, the trend is definitely still down across the board, including Bitcoin. And we'll see what happens over the next few days with the apex of this descending triangle and just go from there. Next one is Tesla. Absolutely brutal week for Tesla. Probably one of the worst weeks I've seen in a while for Tesla. You had this potential support zone here. It was support back in the past. We had a hammer here on the 5th of October, and the red flag here was the fact that we opened and closed within this previous wick. Anytime you do that, not a big fan of seeing a candle's body within a previous candle's wick. And you can see here that we did continue down and actually broke down through this area. Now on the weekly chart, you can see we still have this huge symmetrical triangle. We're getting close to the potential support zone here. We call it potential because we don't know if it's going to hold or not. It has held in the past. That's why, we call it potential support, because it has been support. But for now, we're still holding that level, but we'll see how it holds going into the week ahead. But all in all, not incredibly strong price action here over the last 3 weeks. Pretty much three red weeks in a row. Going into Apple, this is just a really hard chart to even chart out. So you can see here that same thing that we talked on SPY. You've pretty much just got this descending support zone here. That's kind of the main area to watch below. That would be in the low to mid 130s here if we continue down. But as I talked about before, these previous lows are the area that you want to see if they hold first. If not, then this support zone, previous support, we don't know if it will act as support again, is definitely in play once those lows do break to the downside. Now on the weekly chart, yeah, just such a chop fest over the last several months. So you can see here that we do have this support zone here starting in March of 2021, connect it to June 2022. So you kind of have this trend zone here. We're trading a little bit above it, but this would be an area to definitely hold. If not, things may get ugly if we do break that low that we saw back in June, which is down here. So we definitely are still higher than the June lows by quite a bit, but we're moving down pretty quickly, and this green area definitely needs to hold to stay, I guess, in this very slight uptrend since March of 2021. And again, green week, just a absolutely brutal end to the week, and that's why you see this huge wick here, because you had huge selling pressure into the second half of the week, and that's why we have such a big wick right here. Now going into AMD, this is what I was talking about before. This descending triangle here that really had been forming for a while. I think we looked at this a couple videos ago. So we broke down, and then we've moved right down to these 2020 highs here. So March and April, and even into June, you had these highs, and you broke out in July of 2020. But this previous area of resistance acting as potential support. If you look at the weekly chart, we pretty much closed at the low of the week, maybe a few cents above it, but all in all, this is a crucial level to hold, and we'll see if that holds. And this area goes down right to around 57, 58 bucks. We're at 58.44 to end the week, but you do have a little room until we really start breaking down, and that's where you want to pull out VWAPs. But even from 2018, we broke down through that VWAP. So the next big pivot here to look at. I would probably pull the 2016 low VWAP out, and that is down around 48.49. So if we do continue to move down, 48.49 could easily be tested below, and that's just simply your 2016 low. If you wanted to take the 2015 low, that VWAP is still right around 48. So 48 to 50 is definitely an area to watch below for more downside for AMD. You can see here that we've got a similar descending diagonal support zone as I've drawn on a lot of the other charts. We pretty much closed right at this area, but unless you want to try to catch falling knives, that's great. But at this point, this is in a huge downtrend since the high that was put in August. It's still in a downtrend even before that, but we did have that relief bounce, and we've pretty much gone straight down since early August for AMD. So what was leading the market, AMD, NVIDIA, is now kind of leading the market the other way to the downside. Netflix is one that is also starting to make a move to the downside. You had this ascending triangle getting pretty close to the apex, and we finally broke down today. So not a great look here. If you were to look at the kind of start of this support zone, we pretty much closed right at this July 13th low, this VWAP here. You can see it held multiple times back in September 6th, the 13th, the 14th, the 23rd, the 27th. So all in all, this is a very important level to hold. So we moved right down to it. We'll see if we can actually hold above it into next week. But for now, the main thing to keep an eye on is the fact that we did break down through this ascending triangle support zone. And then on the weekly chart, you can pretty much see here that we're trading in a pretty tight range over the last couple months. Pretty much since late July, we've been trading in this range from about 215 all the way up to around 250. So until we really break this range, we're still just kind of within this status quo, which is pretty boring price action. You've had some pretty big moves to the upside, but those moves get faded pretty quickly. But keep in mind this range. If we break, let's say 215, maybe give it a little more, maybe around 210, that's when things can get a little ugly. But for now, we are holding within this box here, this essentially just this defined range. Going into Microsoft, brutal. We actually almost tested the last Friday lows, September 30th lows here. We bounced a little bit into the close. It was only down 5%, so you'd expect at least some type of slight bounce, and we got that, if you want to call that a bounce. But let's put it this way. We didn't close at the low of the day. Same thing here. If I were to draw a support zone, probably even pull that up a little bit to include that, this wick here. If we break down through this previous low, then this support zone below is in play. And as I mentioned, with all of these charts, you need to break and close below this this previous low from September 30th to kind of move on to your next level below, which is that support zone below, shown by this green area here. Now, on the weekly chart, we couldn't even retest this previous support zone. So remember, we talked about that on IWM. We had the breakdown through the support zone. We moved up, retested that previous support zone, which acted as resistance for IWM. Well, in this case, we didn't even get to that area, not even close, really. This is in the 260s. We got to around 250 this week. Pretty ugly candle here. And look at this. This is this is a pretty big move up over the last 7 years. So, technically, Microsoft is down from the lows about 33%, but from 2015, you're still up 484%. So we're breaking crucial support zones here. There's really nothing to say that for like the long to medium term, we've bottomed at all. And the way to look at that is just turn on your moving averages, right? All the moving averages are starting to turn over. You had the 20-week turnover back in March. You had the 50-week turnover start to decrease in June. And you can even see the 200-day is actually still slightly increasing, but you can see the slope is starting to get a little flatter. So is the 200 even starting to get to a point where it's going to be declining? We would definitely need to see the price break down below that 200-week moving average to kind of see that roll over. But all in all, you definitely are seeing some signs of the trend starting to change up here for Microsoft, as well as pretty much every other name in the market for the most part right now. It's a very, very rough market. And if you want to kind of know what's driving it, it's interest rates and the dollar. So keep an eye on the dollar. We don't have DXY on TrendSpider, but we do have UUP. And you can see here, we've been going up for quite some time. Yeah, almost parabolic here. So until the US dollar can get some weakness, which I don't think is going to happen unless other countries really start to ramp up their interest rates, I think you're going to see the dollar continue to strengthen, and I think that is definitely going to be an issue for the markets. So definitely put DXY or UUP up on your chart, and you'll see here it's pretty correlated to the markets, and definitely something to keep an eye on as you are looking at the markets and wondering, why is the market down so much today, or why is it up so much today? Probably has to do with the strength of the dollar, at least at this point. And that's definitely what seems to be making the market right now. The dollar and interest rates are kind of tied together, so keep that in mind too. But it's really relative, right? So like if the rest of the world was raising their interest rates as quickly and as aggressively as the Fed, you may not see the dollar be as strong. But since the Fed continues to raise rates and Europe is really not raising rates as quickly, that's why the euro is so weak. That's why the pound is pretty weak here. So definitely keep the dollar in mind when you are looking at the markets these days. That is it. Remember, we do have a 7-day free trial if you want to try out TrendSpider. There's a ton of different things you can use on the platform, especially in this market. A lot of a lot of things that can be valuable. Simple alerts, right? Let's say you're watching UUP. Maybe you want to see UUP break below this previous low. Right click, create an alert at this line, and you'll be alerted next time the price breaks down through this area. You don't have to sit in front of the screen all day and watch this. You'll be alerted through a text or an email or both when that happens, and you can really make the whole process of watching the markets a lot more efficient with the platform. So remember, 7-day free trial if you sign up, if you want to give it a shot. If you do enjoy these videos, please like and subscribe, and we'll see you in 2 weeks for the next weekend video.